Futures trading is risky and can result in substantial financial loss.
Good morning and afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar. Traders, for the new traders that are here, you know, I guess I could just start off with a little story of why I'm here, why this chat room, why our whole site exists today, and what we think we can do to help you traders out. How many traders are in this room that don't know about our site, about what we do right now? That's right. Yeah, okay, so we have lots of new traders here. How many of you traders have found yourselves doing a number of things? Getting in at the wrong time, getting out at the wrong time, letting your emotions get involved. And how many of you have, we walk past the sharpness, so you kind of understand what kind of waters we're in. How many of you traders have purchased software or purchased programs or have gone to seminars where it's a total waste of your money, looking for the Holy Grail? Everybody knows what I'm talking about, right? The Holy Grail does not exist, traders. The first thing I'd like to tell you is that the Holy Grail does not exist. So don't try to buy it. Don't try to look for it. It is not out there. But there is a way to possibly get this right. Now, a lot of you traders that are trying to get it right, you may have tried a lot of techniques, and maybe over the course of your lifetime, you might trade 500, 1,000 times, maybe 1,500 times throughout your life. When you're a commodities trader in a pit, where I was for many years, you get to trade 500 times a day. And you know how many times it takes to lose until you finally get it right? Probably 10 or 15,000 times I've found out. Over the course of my life, in the trading pits, you start to learn what feels like fire. I've done that before and it seems to be wrong. So you start to develop rules. Luckily, I've had the chance to trade thousands and thousands of times. Throughout my life, I started to realize there are things that you just can't do, and things that you should do in order to trade properly. One of the things that's most important is a way to figure out how to get your emotions out of the trade. So I'm on the trading floor for many years, and I finally figured out things like this would happen to me. What about emotions in trading? I would spend 3 hours doing analysis in the evening before the next day so I could go to the pit and trade. And I'm working at it, and I know as soon as I get in, I'm buying because I don't want to get long. And then I step in the ring and a big seller comes in, and I'm short 20 and I'm down $5,000 like that. And that's an emotional trade. And you allow your emotions to get involved in trading, and it really just knocks you off the game. It turns you upside down, so to speak, in the trading cell. So after thousands and thousands of trades and many years of trying to get it right, and lots and lots of technical analysis, I finally came to a conclusion that everything comes out in the charts. You don't need to use your emotions. You don't need to know what fundamentals are. There's no need to know where GDP is going to come out and how you should react, because it all comes out in the charts. So I'm on the trading floor. I become a very accomplished analyst after years and years of practice. And the trading floors begin to dry up in 2000. Gone, a whole bunch of us traders just have to go home because the advent of electronic trading comes in, and it really begins to level the playing field, takes the guys off the trading floor, and allows traders to go around the globe and trade anytime they want at the same time. But that brings a lot of new traders who just can't seem to get it right. So I leave the trading floor in 2005, end of 2005, and literally I'm home for almost a year not knowing what I'm going to do. The trade that I fly on the floor, I can still trade from home. But when you're a guy that stands in the ring all day, buy them, sold, buy 50, where's July? And now you're sitting home trading from the screen, it's not there. There's no electricity in it. So I started I'm trading from home, and I don't know what I'm going to do. And this guy walking right back there, Mike Sedaros, says to me one day, would you put out a YouTube video on trading live? And I said, oh, you're crazy. I'm not going on YouTube. The last thing I'm going to do is put out a video. I'm usually on this side of the camera. So I'm not going to do it. I stamp my feet and I pout. Sooner or later, 2 weeks later, I'm convinced I'm going to do a YouTube video. In that video, I stand in front of the camera and I say, ladies and gentlemen, I'm going to show you how to trade. I'm going to show you what should happen in the markets, and I'll give you reasons why. Well, as it turns out, interestingly enough, I do the YouTube video and it goes out on Friday. On Saturday morning, I look at my email inbox and I see 50 emails from strangers around the world. They're saying, Oscar, that was fantastic information. Boy, could you do another one? We really like it. It seems so pure and it's real, and it helped us trade that day. So I scratched my head. I said, 50 emails from strangers. I'd do another one the next time. I must receive 100 emails from strangers. So with that, I say to Michael, who makes this first video, from this day forward, we're going to go every day. I start receiving emails now, a week into the videos. They are literal marks. Traders, I bought this software for 10 grand, and it cost 20 when I started trading it. I've gone to a seminar, just horror story. With that in mind, I say traders, if that's what's happening to you, I must tell you that I know, I've been in the industry 25 years, we're trying to find the Holy Grail, and there are people out there that are just going to sell that Holy Grail to you as quickly as you put up that money. I have the system, here it goes, and you take it home, and the next thing you're going to shoot yourself because it's just not working. You blame yourself, and you find another Holy Grail, and again, it just doesn't exist. So what I did was I said, I'll do a YouTube video every night for you followers out there. Just watch the video, and then do your own homework, and then see if what my work applies to your work the next day. And if it applies, then come up with a trading plan and trade that plan the next day. So with that, I started doing video after video, and the fan base began to grow a little bit, and the horror stories would come in, and now they're getting better. I'm starting to do a little better now. I can understand charts a little more. I realize maybe the fundamentals aren't as important as technical analysis, which is what I'm very, very big on. Technical analysis is a really, what I tell most people about technical analysis is this. Charts are really a visual look at fundamental moves and traders' reactions and assumptions. So if that's the case, that means all the fundamentals in the charts, all the reactions and the motions are in the charts, which means the path to where the markets are going are in the charts. And I know this is exactly. And I can certainly prove that to you over the course of this seminar, and especially if you end up on my website. With that in mind, YouTube videos spawned a website where I created a chat room, and in that chat room, I would tell people if you come into that chat room, you'll get a video tonight for tomorrow's trading. Forget about what happened yesterday. We don't care that I can call yesterday's markets and get into that. We can call together as a group tomorrow's markets if you learn some techniques that are different. So I created a website where I would put out my idea what's going to happen, and everyone would come into a chat room where I'm on live video and audio at all times. Literally, with my line guys, 22 hours a day. You will find me there, run those markets on a camera, helping traders around the world. You might wonder why a 25-year veteran trader will have anyone to look over his shoulder. And to be honest, maybe it's a character flaw. Because when I was 11 years old, I used to have 2 paper routes. After school, I would run a good paper route. And at the end of the week, I would make about $18 with my 2 paper routes. What I would do with that money is I would go to a place called the American Society for Prevention of Cruelty to Animals. It's called the ASPCA. Because what they would do is they'd go collect stray dogs and cats and put them in cages for others to adopt. But when they didn't get adopted after 5 days, they would get put to a chamber, and the oxygen would be pulled out of that chamber, and you could hear these animals screaming from 2 blocks away. And I couldn't live with that. So I would work all week to adopt 2 dogs, or 2 cats, or a dog and a cat for $18, and I would bring them out in the woods and turn them into once again. And I did this all the time. Whatever reason is, I like to help. It's just something that I do. With that in mind, I create the chat room and the videos, and it's at no cost to me. I'm trading for myself and my family, and if you traders are having trouble, why shouldn't I help? Well, you might imagine that the snake oil salesmen weren't very happy with that approach, because I'm giving you real information for absolutely free, and I'm not trying to sell you a program, and I'm telling people it doesn't work. There are no programs. Forget about those programs. Well, after a while, a lot of people start believing that that's true. And how many Almacs do I have out here in the audience right now? How many of these guys from all over the country? I am sure that if you spoke to these trading day. With that in mind, I'd like for you all to watch a video that I'm going to show now. These I do on the weekends. They're called weekend webinars, plus every evening or just about every evening. I also do a video on YouTube, a shorter one, for the next trading day. So if you'll indulge me and watch this video, it will be me explaining to you that fundamentals do track the charts, that certain charts lead other charts, and markets can be easy to call if you know how to listen to the charts, take your emotions out of the charts, and allow the chart to tell you what to do. Now, I have found in 25 years, no matter how many times I've asked the market to do something for me, it just won't listen. The markets don't listen to humans. But if humans listen to the charts, you will be able to do what the chart says, and I assure everybody in this room, after the video, and especially if you come join us, I can show you techniques that will make your trading life so much better. So with no further ado, if you indulge me and watch this video, there are 313 of them just like this on my YouTube spot for free for you traders to learn from. After that video, I'll come out and I'll show you the site, I'll show you how we can help you at that site, what you should be doing as opposed to trying to figure out the market. Don't trade alone is what this is all about, traders. First, watch the video and then I'll go from there.
Futures trading is risky and can result in substantial financial loss.
Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar's Weekend Webinar. The weekend webinar dated 5/03/08. And traders, you've seen me about 10 days ago erase Don't Fall in Love with the Upside off my board. I know it scared me to do it as well, but so far, so good. The markets have been starting to turn higher. This video today, we're going to focus on a couple of topics. The Dow Jones Transportation Average is the leader of the indices. Traders Charles Dow back in 1887 came up with this idea. He knew that the Dow Jones Transportation Average would lead the way and the stock market would follow, of course, with the S&P and the NASDAQ and the E-mini Russell and every other commodity that moves with or indice that moves with the transportation average. Well, you know what, traders? We're 121 years later, and this guy's got it right. I'll tell you right now. And I got some charts that are going to show you that he had it right then, and he's got it right today. Now, one thing about Dow's theory, he never intended that theory to tell him where stock markets were going. Believe it or not, do your research. You will see that this is a fact. He basically created the Dow theory to figure out which way the economy was moving. And in such, turns out to be what a genius the man was. We can use it now 121 years later to figure out where the charts are going to take us and how to make money in futures. So go Charles Dow. Talking about a guy that was ahead of his time. I will be able to show you that through charts in a couple of moments. The other topic is a possible fundamental shift in the marketplace. Is there a possible fundamental shift taking place? Well, when I erased Don't Fall in Love with the Upside off the board, I did a long video and showed you many charts which illustrated why I have that feeling that there's possible fundamental shift taking place. Traders, you have to look at these markets as one big picture, a story. And you have to follow along in that story in order to trade them properly. I'm taking you through the story with these videos, and we are at a certain point in that story now where we need to take a look at things closely. We are not out of the woods. I am not a raging bull by any means, and I have some charts to show you why we are not out of the woods. But at the same time, these charts are illustrating that the Dow Jones Transportation Average is tugging at these markets to pull them up. The Fed seems to have stopped lowering rates, which should make the dollar go up. And that, in turn, is a fundamental shift taking place. If our markets are moving higher, which our stock companies are based upon, that average, right? the stock companies of the United States make up the S&P and the Dow Jones and everything else, if they're shifting, if money's gotten cheap enough, where merger mania has taken place, we've all seen merger mania now taking place, and I've mentioned in many videos, when you're reaching important bottoms and tops of major market moves, merger mania takes place. I know that if you've been reading the papers the last few weeks, 8-10 weeks, merger mania is all over the map. That means that our dollars have gotten cheap enough for big companies to go out and borrow them and buy up all the other companies that maybe weren't doing so well but needed a little boost. If that's the case and our dollars are moving up, then there is a fundamental shift taking place that also involves the bond market. If the Fed is done lowering rates, that means the bond futures are now going to head down. All right, traders, with no further ado, let's go through the story to the chapter of trading that we are at right now in the story. Those will come out in the charts. Those fundamentals I talk to you about all the time is the story that pushes the markets around, and the fundamentals come out in the charts first. Let's go look at the charts, traders, and let me show you what I'm talking about. Okay, traders, the question is, you know what? Forget about that. There is no question. The fact of the matter is that the Dow Jones Transportation Average leads the way. I will not argue with someone that's got it right for 121 years. He's got it right. We need to follow it. With that in mind, look at this chart, traders. You are looking at the Dow Jones Transportation Average. The Dow Jones Transportation Average has gotten above our proprietary moving average we love to use here at the Omni Trading Academy. It has given us many, many good trading turn opportunities. We know it works well, so we follow it with many of the indice markets. That in mind, we put in a bottoming style head and shoulders inverted. That is a bullish signal on its own. The market gets above this average. Then it gets above the all-important 200 bar moving average, traders, and all the fund managers are watching that. Now we're above the 200 bar moving average. It puts in another small inverted head and shoulders, another bullish signal, and blasts off. This is a close-up view of the daily bar. I'm going to show you now the Dow Jones Industrial Average and how it follows the transportation average, and then we'll look deeper at a few more charts. Okay, traders, the next chart you were looking at is the Dow Jones Industrial Average daily bar. Once again, you have the inverted head and shoulders, right? It's like a man standing on his head. His head is down here. His shoulders are above his head because he's upside down and inverted. That's a buy signal. The all-important trading average that we like to use here at the Omni Trading Academy, we've gotten above that, but we're just now getting above the 200 bar average. Just getting above. The last chart I showed you, we got above and rallied very high. That was the transportation average. This is the industrial average. It is following the transportation. There is no doubt that that is following the other one. Let's look at a few more charts now, and we'll see if we can illustrate that a little more clearly for you. Okay, traders, now we have zoomed out a little bit, and we're back to the Dow Jones Transportation Average chart. Look at this, traders, above the 200 bar, all important, took out a major resistance trend line. And you want to see something amazing? This red line right here, which I am now turning black, this represents contract highs, all-time forever highs in the Dow Jones Transports. They're right here. Look where we are. We're at 53.85, or at least that was the high on Friday. 54.87 is all-time highs for the transports. All-time highs. This market is leading the way. I kid you not. Look at how close it's gotten. It's within 102 points of going to all-time highs. Now, can it turn around and fail? Well, of course it can. It can put in a double top up here and then turn around and break. But it hasn't done that, and it's not there yet. And we're day traders, so we take this one day at a time. But clearly, this chart is leading the way. That's a more blown out version of the daily Dow Jones Transportation Average so that you could see the previous highs. Let me now show you what the Dow Jones Industrial Average chart looks like blown up in that fashion. Okay, traders, we are now looking at the Dow Jones Industrial Average. This would be contract highs up here. If the Dow Jones Transportation Average wasn't the leader, why is it all the way up here? And we just on Friday, got above the all-important 200 bar moving average. The transportation average did that and dusted it. We're just getting above it. We only recently got above the proprietary moving average we use at the Omni Trading Academy. The head and shoulders inverted has been put in, and we did get above the trend line, but we just got above it. That last picture that you looked at showed the transportation average already dusted that line, left it in the dust, and took off above it. So absolutely unequivocally, the Dow Jones Transportation Average leads the other averages around. Let's go look at a few more charts to see where we are now. And towards the end of the chart segment, you will see in the charts that there is a very possible fundamental shift taking place in our markets. Okay, traders, at this point, I would think that looking at those charts and you knowing how hard I study analysis, if you're a video fan and you watch these videos, you should believe by now that the Dow Jones Transportation Average leads the market up or down. The rest of the market follows the transportation average. Here is a weekly bar. A weekly bar. Weekly bars are extremely important for long-term trend direction. On the weekly bar chart, which means every one of these green bars represents a week's worth of trading, not a day. We bounced off the 200 bar average when we put a bottom in, very important happening there. And we got above the proprietary moving average at the same spot where we got above resistance. They came in at the same spot. And on the weekly, we opened up, gapped up higher this week, and have come very close to contract highs. That's the weekly transportation average. Remember, traders, 121 years later, this still holds true today. Anything that works that well, you best just believe in and don't even argue with. Let's look at more charts here. The Dow Jones Industrial Average weekly bar. Look, we just now with this week that passed in trading just got to that spot where the proprietary moving average comes and meets the resistance. We just got above it and we gapped and left a little weekly gap. Looks a whole lot like the transportation average, except for the transportation average is all the way up to here already. So there is definitely technically justifiable cause to think there may be more upside coming. With any market going in any direction, you will get pullbacks. And in fact, on the daily, we haven't put in that little inverted head and shoulders yet. So it probably needs to pull back a little and put one in. But if it's following the transports, it will blast out of that and go towards contract highs. That is very interesting, traders. I don't know if you realize what's going on here, but these charts are telling us something. They want you to listen. They want you to say, forget about what you think is happening and just follow the charts. They will tell you the fundamentals, the technicals as well, and they are a roadmap to where markets are going. Now, I have a few more charts here that should bring this more into focus for you, so let's keep looking. Okay, traders, the fact of the matter is we don't trade as futures traders and day traders the Dow Jones Transportation Average, nor do we trade the Dow Jones Industrial Average. We trade the S&P, the big one, the big kahuna. We're in the S&P and the NASDAQ sometimes, E-mini Russell sometimes as well, but this is about the S&P more than anything else because that's got the thick volume where you can get in and get out and you're anonymous and it's a great place to trade. It's all electronic. Many reasons why we love the S&P market over others. With that in mind, the futures are what we trade of the S&P. This is the June S&P Daily Bar. Now look at this, traders. Upright head and shoulders, and it knocks us down and sends us all the way down. Inverted head and shoulders gives the opposite signal and should give the buy. Well, it's doing that. On the daily, we just got above a few days back the Omni's proprietary moving average at the Omni Trading Academy. One of the reasons why I started erasing don't fall in love with the upside off the board and thinking about the upside. And we've just taken out 3 days ago the major resistance line. And look at the markets, very, very strong right here. Indicators are also pointing towards the upside. The market is strong. We're getting above some key levels. Granted, the economy is still a big hindrance and people are fearing the economy. But the economy comes out in the charts, which is exactly what Dow thought, Charles Dow, 121 years ago. I know he's right because this is how I live. I think that you need to pay attention. So here we are now. The dailies aren't as convincing for the S&P as the other markets. However, the S&P also follows a leader, and that leader is NASDAQ. And NASDAQ, of course, and everything else follows the transportation average. So let's look at a few more charts here and see exactly what should happen in the near future. Okay, if the case is that NASDAQ leads the S&P around, which is what I believe, look at this. We are above the proprietary moving average. We put the inverted head and shoulders in, and look at how further we are above that average using the leader of the S&P than is the S&P right now. Why wouldn't we think the S&P needs to catch up? Maybe some pullback breathers, but at this point in time, look at the contract highs for the NASDAQ, or the recent highs. They're not all that far away, looking at it by the naked eye. Yes, it's a few hundred points, but that's not a whole lot these days, the way NASDAQ swings around. It may go up and actually try to challenge some of the old highs up here. So we have to continue to watch for the upside here. I still have 1 foot in the bear camp and 1 foot in the bull camp, but the one in the bear camp is starting to lift its leg over the fence as well. I am very proactive, and I will jump when the analysis tells me to jump, either up or down as far as trading is concerned. But right now, the analysis and the Omni Trading Academy is an absolute dead sync. We see what's going on, and we're advising you on a day-to-day basis how to handle it. Let's look forward. Okay, traders, I just said to you I have 1 foot in and 1 foot out of the bull-bear camp. Here is a very good reason why. The respect that the S&P June weekly contract pays to our proprietary moving average is unprecedented. Look at the respect it pays to it here. When it gets above, it stays above for a long time. Every slight test of it made it run back up. Anytime it got near it, it blasted off back to the upside. Well, now we are below it, traders. We've been below it. We did just get above this resistance line here. However, we are not above the weekly average, our proprietary moving average we love to key off of at the Omni Trading Academy. As you see right there, we are not above it. That keeps 1 foot down and 1 foot up. I cannot become a bull unless the charts tell me to do so, and I am very, very loyal to the analysis. I adhere to it. I trade all my trades based upon it, so I cannot project what I think will happen. I can only trade what we see today. And today I say we're going to test that moving average, and if we don't get above it, we have some more downside coming. Then this turns out to be a dead cat bounce rally. That's why you need to have 1 foot in one camp and 1 in the other. There are more charts to show you. There's only a few left, however, that are keeping us bearish, so let's look at a few more charts. Okay, traders, if the NASDAQ is the leader of the S&P, as is the Dow Jones Transportation Average, is the leader of the whole gamut of indices, well, look what's happened to us here. We got above that proprietary moving average and took off and got above the resistance, and we are now right here. If, in fact, the leader, this is the NASDAQ weekly bar, I just showed you the S&P weekly bar, and it wasn't above this average. We are now above clearly and taking off. That is very interesting, traders. If we're following the leader, that little bear and bull leg, 1 in the bear, 1 in the bull, is going to start to have to turn around and go follow the bull leg. But let's see. For now, I must be on my seesaw. I'm on my teeter-totter, but I am not blind. I do see what's going on out here, and I want you traders and analysts to see it for yourself. Okay, traders, next on the block, these are indicators for the S&P June daily bar. The indicators are bullish. The Commodity Channel Index, or the CCI, is absolutely bullish. This red line would represent its conservative high end before it breaks down. It's not there yet. The next one would be where if it went to an extreme, it would have to be all the way up here. So the CCI is saying you got to continue to watch the bull side of S&P. The Relative Strength Index has that same picture. You'd have to get to this line to be conservatively too high and this line to be extreme. We love the ADX, Average Directional Indicator. That indicator is fantastic. It always gives decent trading terms. It is nowhere near its extreme and pointing towards the upside at this moment in time. The green pointing up and red pointing down means you have a bullish market. Then we have stochastics, and stochastics are pinned up between 80 and 90, but when you do become a bullish market, you can stay pinned like back here for weeks on end. So everything that we are looking at right now is telling us, as far as day traders are concerned, you better be buying dips of the S&P, you better be following NASDAQ, and you certainly better be using Dow's theory and following the transportation average. That's what I see in these charts. Now, let's talk about a possible fundamental shift in the marketplace. If that's the case, dollars are going to have to start going up, and bonds are going to have to start going down, and other world currencies are going to have to come down as well. Now let's go look at a couple of charts and see if that's the case. Okay, traders, the next chart you are looking at is the measure of inflation in the commodity world. And if commodities are inflated, there is inflation in the marketplace. There is no arguing that point. If oats and corn and beans and wheat and oils and metals and copper and all the industrial things that we use to make products are getting more expensive, then lo and behold, so is the price tag at the store. And that, when you go shopping and you pay more for products, is inflation. I don't care what TV Land has to say. Now, with that in mind, this is the CRB index. It is a measure of inflation because it is 16 to 17 commodities. I believe the number now is 17 of very, let's call it economy affecting commodities, all gathered up together and divided by themselves to create an average. That average tells you if we have inflation in those commodity markets. And we have been blasting off for quite some time. But look at this beautiful bear flag right here. That, my friends, those red lines is a bear flag. We've broken down out of the bear flag and are just now testing the Omni's proprietary moving average. We are not out of the woods because what should happen, like every other time, is after coming near the average, it should turn around and blast off, which will create more inflation, which will knock our stock market back down. However, if I said that was going to happen, I'd be projecting my hopes on a chart, and I don't do that. The charts speak to me, and you should let them speak to you and not project your hopes onto them either. With that in mind, we hit that average, and we are teetering around it, which means trading is tricky right now. That's where we are in the story. Trading is very tricky right here. The markets do not know for sure where they want to go. They're all hitting major averages. They're putting in major movement, and they look confused, and most indicators are pointing in one way while the chart direction is pointing in another. And that, my friends, is what you should expect when a market is reaching a fundamental shift and a trading turn. Analysis gets very difficult, and you go through a couple of week period where you're losing instead of winning using the same tenets that got you to win for the last year. Don't lose faith if that happens to you. It is simply a trading turn. You trade through it, and the analysis will come back in line again. So if you're having trouble and your analysis is getting tricky, things like this are one of the reasons why, because we are testing, as I said in another video, it's the Aberdeen testing grounds, the Aberdeen proving grounds. The markets are trying to prove themselves right here, and the only way to do that is to get through certain averages and make certain formations and then continue on. Unless the CRB continues down from here, the other charts are going to turn the other way, opposite from the way we're looking at now. Again, that's why I have 1 foot in the bear camp and 1 foot in the bull camp. I am not getting overzealous, but I am starting to see something. All right, traders, if there is a fundamental shift taking place, that should mean that the bond futures market has topped out and lowering interest rates has come to a halt and they've turned neutral. And then the next step is to raise rates. When rates are going up or they're neutral, bond futures are heading down. Now look at how interesting. Upright head and shoulders, that's what topped off the S&P months back. Well, now we have the bonds in that position, and the bonds have gotten below the proprietary moving average, tested it on Friday for the second time, and broke all the way down, almost 2 handles. It tested the average and broke away from it. That is saying that there is absolutely the possibility of a fundamental shift taking place. You see it right here in the charts. The charts do not lie. They are your roadmap to the economy. Ask Charles Dow. Next chart that should help you to decide whether there is a shift taking place would be our dollar versus European currencies. So let's look at one of those. Okay, traders. Next chart you are looking at is a comparison of the US dollar in green versus the euro currency, the ECM, in blue. Look at how they look almost exactly identical but opposite reflections of one another. The dollar has put in a bull flag and broke out of it and is heading towards the all-important 200 bar moving average. At the same time, euro currency's put in a bear flag, it broke down from it and is heading towards the 200 bar moving average. The bonds are doing it. The CRB is doing it, which is a whole bunch of commodities. And now the dollar's strengthening versus world currencies. That, my friends, is a very likely shift in the fundamentals of the economy. So that's what this chart segment was about. I think at this point you believe that the Dow Jones Transportation Average is the leader, and you can see a very possible fundamental shift in our economy based on that bond chart, the CRB chart, and now U.S. currency versus world currency. So, you have seen the charts? Traders, does that excite you? I mean, does that paint the picture for you? Because it paints one for me, and I am a guy that follows these charts, and I do not sway. I am absolutely, I am absolutely convinced that technical analysis is the way to go and is the roadmap. And I kid you not, the fundamentals always come out in those charts first. The Dow Jones Transportation Average, as far as I'm concerned, is the leader. Go back, review this video, and see if you think so for yourself. Do your own homework and check it out. And is there a possible fundamental shift taking place? Well, when dollars start running up and currencies start running down against them in an extended move, and the indices all start running up and the transportation average is ready to hit new highs possibly, the S&P is getting above an all-important moving average on its weekly bar, which it never gets above. You know, the bond market topping out, hitting an exact level where we were expecting for it to stop, and it does and breaks. You know, I mean, what else do we need to see? The CRB index now finally giving back some, and that's with crude up 400 on Friday. The CRB still looking like it's giving back some. However, it did bounce off our all-important moving average. So that, as well as the S&P weekly bouncing off of it, keeps one foot still a little bit bearish. I have no choice. I do know that dead cat bounce rallies happen, and that could very well be all this is. So if that's the case, you know, we'll trade it that way. But for now, that's not what I'm seeing, and that's not what I want you to see. So make sure you see the charts for what they are and not what you hope to project. Traders, I hope that these charts are giving you a little bit better view on which way the markets are going. I hope they're helping you get your homework done. Doing your own homework is so important. But us here at the Omni Trading Academy will tell you this every day, and it is don't trade alone, traders. Never trade alone, because the work I do in this camera for you is nothing compared to the work that I show my Omniacs on a daily basis at my site. And you should come on down and trade with us, because there is absolutely strength in unity and numbers. And if you have enough people who all have done a lot of intricate homework and came up with the same thing, but not too many people to move the markets at all, well, then you are most likely looking at a move that will go in that direction. Let's face it, if the charts do work, and if I can keep teaching analysts and traders to be better and better at reading them, well, if enough of us come up with the same answer, you know, we all go with it, because why wouldn't we? And we will teach you how to do that here at the Omni Trading Academy. So come on down to www.livewithoscar.com. Grab yourselves a membership. There are free memberships. It'll cost you nothing to come hang out with us and see what it is that we can teach you. See why there is an ever-growing army of Omniacs who come to our site every day, because, quite frankly, in plain English, they're tired of being out there in the shark den where there are people talking a good game and trying to sell them crap that just does not work. And I got sick of watching these people be taken advantage of, and I started this site and these videos to help you. So come on down and take advantage of it, because that's what I do for you. And you will see once you get here, we are not looking to hurt you in any way. We are here to help you learn these charts better and follow these markets so your account starts to go up and not down. There are no guarantees in life, and especially in futures trading. Let me tell you something right now. You can be wiped out in a day if you're not paying attention. What we do to make that not happen is we keep our stops in, because when your stops are in, your emotions are out, and the risk has been predetermined. So what you need to do, of course, is put your stops in and get your emotions out of this and let the charts tell you where we're going next. All right, traders. So next thing I want to talk to you about real quickly is the money show at the Mandalay Bay. How many days we have left, guys? Come on, it's an easy count now. Today's the 3rd.
10.
9, you knucklehead. We have 9 days left to the trade show at the Mandalay Bay. It is the 12th, 13th, 14th, and 15th. We will have a booth there. We will be be set up and running our daily routine right from that booth. I have a speaking engagement on Wednesday the 14th where I'm doing a seminar right out in the open, right in Exhibit Hall, the big stage. So come on down, book your tickets. It's certainly not too late. Come on down to Vegas and join us at the Money Show. Meet the army of Omniacs that are going to show up and meet the Omni Trading Academy team. All right, traders, I'm not going to say much more because this has been enough work, and we're all going. Where are we going, guys? ATV. We're going on an ATV tour, baby. We're all jumping on ATV. And we are going up the mountains. In fact, guys, we're going to bring cameras?
Yes, we're bringing cameras.
Yeah? All right, so we'll bring some cameras. We'll film some of it. And we'll try to get some at the end of the video for you. So stay tuned for that. It's not an absolute promise because you never know. But if it goes well and we film some of it, we'll put it at the end of this video for you. All right, traders, give me a call anytime day or night, 702-629-4755. And as always, keep those emails coming in. We love the emails. We answer all of those emails. You can shoot me out emails anytime day or night at oscar@futuresanalysts.com. That's about it. Hey, it's 300 and how many now?
8.
Is that a real figure? Or you just throw that one out at me. All right, we have 308 videos on our YouTube presence. We have a presence on the YouTube. It's called www.youtube.com/futuresanalysts. When you get there, you'll find 308 videos, a lot like this one to learn from. So do some homework and come jump into the Omni Trading Academy and learn how to get this right. When you get to the YouTube videos, do me a favor, subscribe to the videos so you get notified every day when we put one out so you can go see it. These videos during the week, traders, we give you information geared for tomorrow's trading. We don't tell you what happened yesterday. We tell you what will likely happen tomorrow and what you should do to capture it. So watch the videos, subscribe to them, and leave comments on our videos because I love the commentary. I love to go back and forth with you traders who watch us on YouTube, and I will answer any of your comments that you post there. All right, guys, am I forgetting anything before we go ATV riding? Get out of here. All right, traders, don't forget, say this to yourselves every day, every morning, every afternoon, every evening, even when you're on the ATV. Say this to yourselves because it keeps the emotions out of trading, and you know what that is. Stops are in. Emotions are out.
All right, so you see that analysis. I don't make these charts up. The economy and the traders' reaction is such is what makes those charts up. And I kid you not, they don't know that where they're going next. And if you traders don't run and figure that out, then you need to get that chapter right there. Right now we're about 37 people, and generally we have 50. And they stay with us every day. If we get them in and out of the market, traders in the chat room, can you read me right now? It is so interactive that we do this 24 hours a day. Well, they may bash me. So what I normally do is I do a YouTube video, but before that I give you a trading recommendation telling you exactly where I would like to buy, where I would like to sell, but more importantly, where I would like to place an executive stop in case we're wrong. Then I do a YouTube video for you to see. This is all the night before. Then the next day, or actually 22 hours after 24 hours a day, I'm in that room, in front of the camera like this, on a microphone. You see me in the room, and I interact with you, and I teach you how to do the analysis correctly. And if you do get into a trade, I'm not a guy that gave you a trade and ran away. I'm the most accountable guy in the world because there it is right there for you to see. And I'm there to help you, to show you that we can get this right. Traders on top of this, I also hold a class every day. Believe it or not, the YouTube videos I do is nowhere near the level of analysis that I teach the traders. Am I lying about these classes? I take you through classes throughout the week where I lend my desktop out to you, so everything I'm doing with the mouse and the charts, you see me on video, you hear me on the microphone, I pull the charts up on your computer and teach you how to use them. And we do this every day. We hold the chat session open, we have the video for you, and we instruct you every day to help you get this right. And I kid you not, I think that video may have convinced some of you analysts that certain markets do follow others, and fundamentals absolutely cannot be charts first. How many traders that are Omniacs, let me ask you that, and an Omniac is someone who's joined by sight and has realized that there is strength in unity, and when you have numbers of people together doing the proper analysis, coming up with trade recommendations as a group, if 50 or 100 people have done all different homework, they all come up with one answer. The likelihood is we're probably getting that one right that day. And what I try to do with you traders is to teach you and get right. Has it helped you? Has it helped you guys? How many traders raise your hand? And if it hasn't, please express your opinion. That would be the comment. How many traders has this sort of analysis and this chat room helped that you've met? Congratulations to all of you. And I will say, I have some of the best students I have ever met because you guys work so hard trying to get this right. And it makes me proud. It makes me want to get up and do this every day because of how much it's helping you traders. And literally, that's what this is all about. It is to help you traders. I know you are lost out there in the sharpest vested oceans, trying to get through these trades, trying to get it right. I know it's not easy. So if you would like to join us, I would love to have you come to this site, tell us what you're doing, allow us to analyze your analysis and see where you're having difficulty. Before we go further, are there any questions? Anybody feel free to ask just about it. What does this mean? This is a trading badge that I have had. This one's actually for the evening Russell Club. But I have badges for it. I've traded in gold, silver, copper, coffee, sugar, cocoa, options on all of them, evenly Russell, evenly Russell options. So this is my trading code, and you know, when you're in the pit, you know one another by your trading badge. So everyone has to have one so you know you're trading. Anything else? Okay. So is there anybody a little bit more convinced now than before that video that analysis is absolutely a better way to go than trying to figure out fundamentals? Fundamentals traders, how are you supposed to know if the GDP is coming out at 6.9, you're supposed to be a buyer, but it comes out at 6.3, what are you supposed to do? And then the next report's coming out at 10.12. How is anyone supposed to get that right? I don't think that that's possible. I don't think any of us is smart enough to figure out what all the traders in the world are going to do after a report comes out. But I do think that if you look at those charts and you realize that report's already built in, if you've done your homework properly, you should know what was going to happen. Now, I think I know what's left. That's it? Wow. I could go for 3 hours. All right. All right. First thing then, let me say this. If you traders have these cards on you, any traders that fill out the back of this card, give us your email address, you don't have to give much information, we will give you a free membership at the site. You can see for yourselves that you should absolutely further your education in analysis because it is the way to go, traders. Another thing I will say is I'd love to thank my lovely wife Lisa right here because without her, I would never be able to spend as much time as I do with you traders, and I love spending time with you traders. Thank you, Lisa, for allowing me to do this for everybody. Okay, traders, please make sure you come on down to the site. Again, because there's nothing to grab an education. I am here to help. Any people out there might not like this, but so what? I will do it anyway. I will help as many of you as I can. So come on down and help yourself. All right, traders, that's about all I'm going to do for this one. You know what I'm going to say? I'm the actual one to help me out with this. Don't forget to say this to yourselves every morning, every afternoon, every evening, because it will really help you with your trading. And you know what that is? Stops are in. Emotions are out. Wow.
Let's give Oscar a big hand. We have some other people out here. Thank you for coming, you guys.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I am a 24-year seasoned trader on and off the floors. This is how I've made my living for many, many years. Good luck trading.